The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
With your lovable koala of Wall Street, the koala bear of Wall Street. I probably should be both, koala bear. Although I don't know many other koalas, but could be interesting. We've got a interesting day in the markets. Got a little bit of a bounce out here. One of the things I had noticed early on in the day was a very light volume in the first probably till 11 o'clock. And it is just about, hang on just a second. Unfortunately, we've got discord at the White House today. Apparently, one dog didn't like the other dog having something, and now they're going at it nonstop. Hopefully, we'll put an end to this during the break. Normally, I put them in the bedroom, and they've been all nice, having their little quiet naps, but walk up and now decided that it is a time to trade with the trading dogs. The trading macaw in the background, that'd be interesting too. But anyway, as we look at the markets, one of the things I did notice was the light volume earlier. We're about 2.2 billion shares as we start the show today on the Consolidated New York Stock Exchange tape. For those new to the show, I quote the volume of all shares traded on the New York Stock Exchange and the Amex. And if you put if you put that together, you get the Consolidated New York Stock Exchange tape. If you put that together with the volume on the NASDAQ, you'll get the total volume of all stocks traded that isn't traded across countertops and backroom alleys and all the other things. But 2.2 billion shares is a little bit better. But as the day has gone by, we've seen this volume come in after we hit a high of 1840 today. Every time we get up here, we start seeing that kind of selling come back. I've been adding short positions, one yesterday, two today. I normally segment my money into 10 positions. If you were to lose 10% on any one position with only 10% of your money in it, you would not lose more than 1%, which is kind of an easy way to just think about it. Whatever your trading portfolio is, divide it by 10 and decide that you won't take any more than a 10% loss, and you'll no longer or never lose more than 1% of your total portfolio. Kind of an easy way to think about it. But sometimes I'll overweight in a particular one, like an ETF. But most of the time, I will slowly put on positions. The idea that you should always be 100% invested, I don't know about that. I think there are probably 3 or 4 times a year where you're going to make very big money in the marketplace. Those times, you need to have some cash ready to go. I think we are in that period now. I guess maybe in the next segment we'll look at it, but I'm going to be doing a lot more with talking about how to trade equities based on their underlying options. We've talked about many times about how options point to the price on expiration, kind of wisdom of crowd thing. And one of the biggest statistical tests that most professors will do is take in a gallon jar of marbles, set it down on a bar, have all the patrons guess how many marbles are in it, and there'll always be somebody that says 5,000. There'll be one guy who'll say 5, and if you average them all out, you're probably going to get fairly close. In fact, if you get about 25 people in a bar that will guess on how many marbles are in a jar, normally you're going to be plus or minus 4% away from the true number. So a pretty high statistical average with only asking 25 people. The more you ask, of course, probably the closer you're going to be. That's kind of the heart of the wisdom of everybody. If you ever go to a horse racing track and go where it's a pari-mutuel betting, the odds are set on the way people actually bet. And that's pretty much the way options are looking at paying off. Of course, 85% of all options go expired. But I was talking to somebody in the den, I think maybe it was last night later, and had been looking at options, and I was trying to see if there was any way, looking at all the options for the SPYs, if there was any way that we could look at a higher expiration this cycle. And, of course, things can change. But at the moment, pretty good indication that we're going to have at least a minor pullback a week from Friday to around that $1,800 or $1,800 level on the S&P cash. We're not predicting huge crashes, but at least maybe a temporary high out here. And it would not be uncommon to see just the peak take a while to get in. Jesse Livermore, one of my patron saints, the gentleman that is the reminiscence of a stock operator is all about, the thinly veiled biography of a early 19th century trader. He really says, maybe I'll try to get the quote during the break, but he always said, a market does not turn on a dime. And you really need to see that normally, especially at these highs, you either get double tops, but it's not like a light switch went on and everybody starts selling as they would have you believe on CNBC. It is kind of this slow discovery that top is in. And everybody at one time doesn't say, top's in, time to go short. Especially when we've had such a slow but steady move up in December that got rid of a lot of short players. There aren't a lot of people shorting this market coming back in from all the data I can see from trim tabs and watching the market. We've seen a lot of stocks that had 15 days to cover in short interest at the beginning of December go to 5 or 3 days or 2 days. I see a lot of stocks that I wanted to short, that short interest is slowly bleeding off, and even with big upgrades, some of these getting a fairly modest bounce out of today. But short positions looking fairly good already for me, and we'll see how they go. This is going to be one of these that probably, if we are right about the pullback, that we're going to see something in the neighborhood of a 60 or 90-day trend down. And, of course, there's going to be sub-trends in those where we're going to have little pops up. But the characteristic off a top normally isn't the kind of just blow off, everything goes to hell in a handbasket. If we go back and look at even the worst selling that came back in after the end of a year, like we saw in 2000, it came back by March or so, and then that's really when the destruction started to happen, although there were a lot of super bloated stocks at that time. We've got bloated stocks. I don't know if they're super bloated. There's a few out here that have absolutely no basis in reality for their price, and we've discussed that several times. But we'll look at a few charts, and then we're going to get into some other stuff out here today. First of all, I wanted to look at the gold chart. We are having gold put back, and maybe I didn't say it enough, or I had some questions. You can always email me at path@tfnn.com, or you can call at 877-927-6648. But one of the things I really didn't really like about this gold pullback was that the energy really didn't come to a standstill. And if you're watching on Tiger TV right now, you're going to see the move in the GLD, that move from June 28th at 114.68 up to its high on August 22nd. And then I'm comparing that to just a slightly smaller move and trend back down, the October 28th high back down to this December 31st low. Now, it did exactly what you wanted to do when it tested that low, which is it came in with half the volume. That is just half the battle, though. I wanted to see a very low number, something like a 3 or a 2.5 or something in this last leg down to make me think that all the work that gold needed to do was over to put it in the bottom. And with these kind of numbers, I'm looking at a 5.7 on the way up and a 5 on the way down, although this is actually just kind of a smaller leg. If we actually kind of jury-rig these two together, we'd see that the energy up from that 114 July 28th low up to the 137 high. And then if we kind of put those back together and put the number back down to the 114.46 low on December 31st, we probably see that energy was probably just about the same, although we had some minor downtrend changes in here. So we didn't get the huge pullback in volume on the way down that I'm looking. It was nice, but it comes to a point that I like to make, and that is that I want to see congruence. And one way to say that is if your best buddy calls you a rather vulgar name, but he's laughing when he said it, you know he doesn't mean it. If he's got a scowl and he's mad as hell and his face is bright red, you know maybe you've done something wrong, or at least he thinks you've done something wrong. But it's all about being congruent and smiling while you call somebody a dirty, filthy name, not very congruent. And we had half the congruence. That is, we had the light volume at the lows. What we didn't have is the total lack of energy on the way back down. That always makes me think that you've got a 50-50 chance that you need to do more work down here at the lows. I still think we want the gnashing of teeth, the wailing and the tearing of clothes, dogs living with cats, temperatures approaching near zero over the United States. Oh, we already have that. But anyway, we really need just one more time where everybody just is sick of gold. And why we've seen some tastes of that. I haven't seen the really true hatred of gold on a daily basis yet on the infotainment cable stations. Anyway, we'll be back in a minute. Give me a call at 877-927-6648.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, I had a question in the den, and that was to look at Google. When we look at a lot of these stocks that are in rarefied air, Google does not come to mind. It is a company that you can easily tell how they make money. You can easily value them. There isn't a lot of conjecture on that. They sell ads, they take money in, and the company grows. And it's not like they have some of these flaky ideas floating around, but you always have to put a few of those out. They don't bet the company on them. And you've got to say that since the current CEO has taken back over, is running rather smoothly again. Probably the biggest thing is that this thing broke out with a decent volume, and you'd have to look at this thing if it came back to $950, but it's giving no real clear signals to me that it is failing, although I can see a ton of other stocks that are. So I don't know exactly what he was planning on doing with it, but Google is probably one of the better looking tech companies out here. If you read my Tech Insider on Friday, you would have known that Netflix was in trouble. I think we teased it with the thing, which company is Amazon going to eat next? And that is Amazon is going after Netflix. About an hour ago, Sony basically said that they're going to get into the streaming media business, and of course they have a lot of content to bring to the table on that. And Netflix off fairly strongly today. Volume has certainly picked up over the last few days. I'm thinking this company is probably worth $125 at the current growth rates. So a lot of fat to cut away from the meat on this company. I certainly have all these big gaps down here to fill, probably headed somewhere around $300, $290. I have to say that I was hoping to get a bounce, and I think that the downgrades over the last few days were just too much. I was hoping to get back above 360 to pull the trigger on it. I never got it back up there, so I missed it. But Netflix looks like it's pretty much on its way down, and I'm going to say that they're going to have an extreme amount of competition from both Amazon and Sony and probably several other cable companies going into the streaming business. This is kind of a manufactured stock, like a lot of them that get to these high levels. But pretty much it looked like it's falling out of bed today. We'll have to see what the current volume looks like at the end of the day. Lululemon got a huge upgrade this morning. People were trying to push it higher. It just really couldn't hold it. Still not going to hold it. A lot of problems with this particular stock. One of them is it's pretty much based on a single, I'm going to call it a fad, and that is yoga athletics. These have always come and gone. My guess is we're on the backside of that. A lot more companies offering Lululemon see-through pants for yoga. And maybe a law needs to be out there about who can wear them and who couldn't. Maybe we need to have a panel. Thumbs up, thumbs down. And, of course, guys' Speedos. The women could judge those and see who would be available to wear those. But we've got to look at probably what is the early adopters and probably the peak of the market in for yoga clothes. Maybe they'll find some stronger clothes out there. But to me, the stronger stocks in this business are probably going to be Under Armour and some of the others that aren't stuck on just one trend of athletic clothes, but have a little bit more range. Nike, Under Armour, some of these other ones. I think all of them look weak. But we have come down, broken a previous low in Lululemon on higher volume. We need to go down and test that $57.35 low. If the market does start to pull back, I think we could see much lower than that, no matter how many upgrades we get today. I know we've got Andy, who will be stalking me shortly after my show is over today. We're going to probably see more warming temperatures in the next day or two, and that's probably going to take a little pressure off the markets as they stand right now, at least in the energy markets. But we're also seeing a bit of freezing on some of the rivers, so it's going to be an interesting energy market over the next couple of weeks. Anyway, we'll be back in a minute. Give me a call at 877-927-6648 or email me at pat, P-A-T-H, at TFNN.com.
2014 has arrived, and Tom O'Brien has put together a special webinar for subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of the special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
100.9 TFNN. 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 100.9 TFNN.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, pretty much all the action in the market, I'd say 80% of it, is all on bogus upgrades and downgrades. One of the ones we have being downgraded today is Michael's Kors, KORS. This thing has finally started to go through the downtrend line. It started back on June 24th of this year at 56.15. Not a bad looking chart. When we look at what's actually here, it is finally, you've got some dips where this thing is actually broken below some of the trend lines. It's always popped back in there in a few days, but certainly looks a lot weaker today. Volume has picked up. You've got gaps at 75, 71.5, and 69 to 68. And this is more of what looks to be like a mini gap fill, and I probably think that this has some support, or that you would want to buy it maybe back in that 65, 66 level when this all comes back down. If it does on lighter volume, they've been doing well, but all these tend to overshoot somewhat, need to come back to the overall mean in this, and I could still see that we are looking at a definitive break of the trend here today, but probably going to take a while to get this thing back into that level. You might see that it actually stalls out at 68, but 68 to 66, probably going to be looking at that as one of the stocks that probably has a better chart setup after a long and deliberate pullback. Other stocks that I wanted to look at of interest, let me go back here and look at them here. Of course, Twitter. Of course, we've been talking about this for a while. TWTR. This one was off another good 4% today. And, of course, not a volume really picking up that strongly so far. And it is in the trading zone. One of the things that we want to be looking at this is this making more of a asymmetrical triangle. If we go back and start a line on December 18th and the other one from the top of December 26th, and just make kind of a big greater sign out of it, we find out that this is probably in the dead mid 64 range, probably fairly decent. It hasn't been out long enough that the powers that be on the exchange floors have been able to push out all the stock on this. I assume that there's going to be copious amounts of PR pushing this for a while. And normally I like to see either being short or long stocks that have been out a little bit longer than this. But the asymmetrical triangle right now, in fact, let me do this so you can actually see just a little bit better here. I will draw on this. Can I image view, zoom? We'll go to 200% here. What I want to do is just show quickly what I'm talking about, and that is if we just put kind of a big looking greater than sign on this. This is called an asymmetrical triangle. It basically talks about lower highs and higher lows. The pressure is coming in. Normally what you want to see is if it gets about 3/4 of the way through that triangle and was still not truly breaking in or out of it, then the first breakout move is normally 75% of the time to the opposite side of the true longer-term direction of the chart. So I could see this thing once again pop back up into the $70 range on, probably shake a few shorts out, see a lot of volume, and then no follow through at that $70 level, and then go back and see that maybe this could be a short. But again, I don't like stocks that haven't been trading for less than a year. You really don't have a lot of feel as to the character and just the flavor that a specific stock has. I think that there are better ones out here, but Twitter is setting up that pattern, and maybe be a good one to figure out how it's doing. Let's see what else we have out here. MGM is up a little bit. MGM. Oop. Got to get one more M in there. MGM Resorts. A lot of these stocks are up here and could fail rather spectacularly. Do have some decent volume on MGM today. Kind of surprising with all the cold weather and the missed flights. Hotels probably not at capacity for one of the biggest conventions that they have each year. So it's going to be interesting to look at that. But certainly a few of these stocks still have at least some kind of time before they break down. But I think we're going to see, just like the candle on MGM here today, that we're probably within the next 24 hours going to see tops in almost all these stocks. I'm pretty much thinking that just the energy, short squeezes, these bogus upgrades are probably a good sign that and the reaction to them, more importantly, is troublesome. W-Day. The old PeopleSoft gang reformed and had this company come out called Workday. And I have to say that I missed the stock. I really liked its both business plan, and I like the people behind it. It is one of the better companies, and it has been able to fly under the radar for some while. It's had a nice breakout. Volume is going to be greater than today. I kept on thinking that we were going to get a huge pullback. On this one, I'd have to wait for it to come back into the $75 range. But if we're looking about companies that could really do land office business in the next 5 to 10 years, this has got every box checked. It is more like a human resources company online, and it'd probably be good to check this out. WDAY is the symbol on it. Of course, decent breakout today. Could you, if we are really going to continue rallying, see a pullback maybe to the $84.50 level or $85 maybe over the next few days, and see this come back? The other thing is a play where this actually hits $90. Stocks that normally hit $90 will probably go to 100, and it's a high probability, something like 90%. And this hasn't quite hit 90 yet. You'd like this thing to pull back, but a lot of times these plays are very high in the way of returning money once they do hit $90. So if you could get a pullback to 85 without it hitting 90, and then move, once it hits 90, you've got a high probability of hitting 100. And normally I just put a sell at about $102 on those and collect my money and ring the register and go on. But you want to keep an eye on that one. STM has been downgraded. Let's take a quick look at that. ST Microelectronics, a lot of these electronic companies that aren't involved in either building tablets or smartphones, not doing too well. Not a lot of movement in this stock. Was it off, what, 2% or something like that? But certainly a lot of these need to come back and test these down. Now, the reason I wanted to show this one today was my comments about GLD and how you could see the energy almost the same in these moves ups and moves down that you can see with the power law vector indicator number. Now this one very similar to GLD, the April 19th low at $7.11 up to the high at $10.05 on June 19th. Slightly lower move out here, but the energy about the same. It's another one of these stocks that's tested the lows or come close to testing the lows with about half the volume. And you still see the weakness down here below. And that is because you need two things. You need it to be congruent both at the volume at the lows, but also at the energy as it pushes back up. And if this energy in this last leg had really come down, maybe 1.5, 1.8, something like that, you could really see that these things are just like springs ready to go off. A couple of people asked me why I went into the trade on MCP, and that is why. Not only did it have a test of the lows on very light volume, the energy in this last leg when it came down was very light. And a lot of times you'll have just these things bouncing around in big trading ranges, and they're very hard to trade. If this thing would have come back down with like a 2 on the second leg or maybe a 1.5 on the second leg and came down and had very light volume, not just at the low, but all the energy all the way back down, this thing probably would have been great to take a trade off that 720 low back maybe up to the 850. But you only got about $8 out of this thing, and the reason why, too much energy on the way down, and at least that's my experience. To CVG, now here's what we've got, a nice one popping today. And they're going to acquire Stream Global Services, but still kind of interesting that we couldn't see these stocks hold the highs earlier today. In fact, let me check what we have going on here for the broad indexes. Just let me update it. So we're up just a little less than 11, 2.4 billion shares on the day for the New York Stock Exchange consolidated tape. But this is not uncommon for what we're seeing out here, and that is, and why I think we're probably close to a top, is this kind of huge pops early in the morning only to be sold off later in the day. A lot of times these news moves are all being faded. And what makes me think on a grander scale that we're going to close back a week from Friday somewhere around 1,800 or lower on the S&P cash. But nice pop-up here that we've given more than half of it back. I always use that as a kind of a yardstick to look at how some of that is going to be done. Let's see. The chart looks weird. I wonder why it looks weird. Don't know exactly what that means. Looks good now. Okay. Anyway, what else do we have going on here? Oh, wanted to look at that. And there's a few more out here that have caught my eye. I spy with my little eye. Another downgrade, SPN. Yeah, Superior Energy Services. SPN, this just looks like it's ready to at least go back and test the low that did not get tested before 24.28. And we continue looking at those. So what can we look at out here? We had Coors, Workday, MGM, VRX. So what do we have in this? That was a nice bounce in this one. This one has kept its highs. A lot of these pharmaceutical and biotechs have failed at the top over the last few days. This is one where the volume and the highs have been preserved most of the day. Fairly a decent volume. Probably could have used just a little bit more, but not bad. That's volume's about what the October 3rd volume was like, and that was a nice pop. So you can still see that this one has farther room to run, and it's kind of another one of these that at least has a medium-term level under it, and certainly it's ducked under the long-term a few times, but it seems to run fairly decent. Energy on this last leg compared to previous legs, not so bad so far, at least compared to the August to the October leg, kind of equaled it. And, of course, today we're going to see all that volume come in today. So this one is reaffirmed Q4 guidance, guided fiscal year 14 EPS toward the low end of expectations, but 14 revenues above. So we'll be back in just a couple of minutes. Again, you got just a little time to give me a call at 877-927-6648. That's 877-927-6648. And we're going to get into how options can give us an indication of where we're going. Of course, tomorrow is the start of the options expiration cycle when we will start seeing option market makers go delta neutral. Anyway, we'll be back in just a bit.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And as we come back, I wanted to get into what options are telling us. And again, these can move wildly in the next day. Each month, options expire the third Friday of the month. They expire on the Fridays each Friday, but probably about 1/10 of the money in weekly options that there are on monthly options. We also know one of the other things, and that is that if you're buying options as hedges in the marketplace, you're probably not buying 1-week options unless you're buying them just for an earnings date or perceived news coming out that week. So I watch the monthly options. There's a little bit of pressure from the weeklies. Once you get into the last week of options for that month, there are no weeklies anymore. It's just that monthly expiring that week. But one thing we can do is add up all the money, people betting both bullishly and bearishly for options. In this case, on Tiger TV and in the Den, I'm showing the curve for SPYs. I'm going to be watching this very closely over the next 24 hours and into tomorrow's show. We're going to cover this on the show and in the newsletter and probably in a coming webinar fairly soon. Stay tuned for information on that. But what we do have is both the January puts and calls and the February puts and calls pretty much telling us the same thing, and that is that the market is set up for an expiration right now of about 180 on the SPYs, so off about 35 points. And a pretty good indication. Of course, a lot of people buy puts and calls at big numbers. The law of big numbers. People like to buy 1800s and 1750s and 1700s and all that kind of stuff. And you'll normally see the open interest on those much larger than the others. That makes a giant target for people that can manipulate a market for just a certain few days. We'll say that the market wanted to expire without options at 1815. It wouldn't take a whole lot to drum up some phony news, tell everybody the earth is imploding from the inside out, and maybe get another 15 points shaved off if you're JP Morgan or Goldman Sachs or something like that. They constantly are out there manipulating the press for their own devious and nefarious ends. Sometimes maybe they tell some stuff that covers up all the other times. It's kind of like listening to spies. You always have to double and triple check and quadruple check what they're telling you in case they're double agents. But one of the things you can tell is where they put their money. And that doesn't lie very easily. And in fact, on options, hard to tell if it lies ever. At least you know that someone's put some money there. It's a little lot harder to figure out where people bought and how much money they're winning or losing in a position. Sometimes Tom is nice enough to hit the Bloomberg, and you could see kind of where people are in equities. But in the options, much better idea out here of what Jesse Livermore called the composite man, the average Joe. And a lot of times I have a factor where I'm going to add money to the high side of this number because of a huge amount of shorts. Sometimes there's a number that's lower when everybody is too bearish on the market. But right now we're looking at probably 1800 for a week from Friday is at least what the composite or the wisdom of crowds is telling us. And we'll have more on this tomorrow. I'm going to start bringing up specific stocks through expiration this time, and hopefully we'll maybe make some more money and learn how to trade equities. Oh, here it comes. Here he comes.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.